We're going to go over how much home can you get using FHA financing with both $50,000 annual income and $75,000 annual income. So we're going to go over a bunch of numbers in this video and a disclaimer up front. Firstly, these numbers that I'm giving you are just for your education only. They're not, this is not a pre-approval. Don't think, oh, I listened to that video, now that means I'm pre-approved for this much money. No. If you want to actually get pre-approved, you have to talk to a lender. And because everyone's situation is different, you might have a $75,000 income, but how much debt do you pay? What's your credit score? There's a lot of different factors like that that are going to be considered in getting you pre-approved. That's why you need to talk to a professional, a lender. And a disclaimer, I am not a mortgage licensed specialist, but I am a licensed real estate agent. So, this information is just for your education. And again, if you do need to speak to a lender, hey, check out the links below, get in touch with me. I'll be happy to put you in touch with a good lender that I know, like, and trust that can help you out. And also the figures I'm going to be using, there's going to be a lot of them, are also going to be contained in the description, so that could be helpful to you as well. So having said that, let's get into it. Okay, so let's say you have a $50,000 annual income and you're going to use FHA financing. Let's say you're going to put the minimum down, FHA, which is 3.5% down payment. Okay, let's assume your credit score is over 700. You got a good credit score of 740. And that's because I've done two other videos, and I'm going to hit a link to both those videos above. The first one is for if you have an income of $50,000 using conventional financing. Check that link out above. And the second one is also if you have an annual income of $75,000 using conventional financing. So check out both those links above, and that'll give you a different picture of how much home you can afford. But with FHA, let's get into that. So $50,000 of annual income, first thing we do is you break that down into what's that per month. Well, that's a monthly income of $4,167. And the thing about FHA financing that's different from conventional financing is they let you use more of your income towards your mortgage payment. And that whole process is called debt-to-income ratio. So in conventional financing, as in I discussed in the other videos that I linked to above previously, it's around 45%, 43 to 45%, which means, using some round figures, if you make $10,000 a month, what's 45% of $10,000? $4,500. That means the maximum amount they're going to let you use of your $10,000 a month income is $4,500 towards your mortgage. That's what it all means. So in the case of FHA loans, they'll let you go up as high as 57%, which means they'd let you use $5,700 of a $10,000 income to go towards a mortgage. So that's the first, that's a real cool thing about FHA financing. So let's check that out. $50,000 income. You've got $4,167 monthly income. What's 57% of that is $2,375. And just another disclaimer, I am going to be looking down. I have a lot of these figures written down on, a clipboard here, so I'll be looking down at that. So we've got $2,375 is your available income, monthly income, that you can use towards your mortgage with FHA financing, assuming you have no debt. And we're going to go over two scenarios, one where you have no monthly debt and one where you have $450 of monthly debt, things like a car payment, credit cards, and student loans. So we're going to go over those two different scenarios and see how it affects how much home you can actually get. So firstly, with no monthly debt, $50,000 income, 57% of that monthly income comes to $2,375 a month is the maximum amount of your monthly income you can put towards your mortgage using FHA financing. And if we say you put 3.5% down, we're going to assume, the mortgage, the interest rate you're going to be using is going to be around 5.85%, somewhere around that area. That's going to get you around $320,000 of home. $50,000 of income using FHA financing, 3.5% down, assuming you have no monthly debt, it's going to get you about $320,000 of home. That's a really good deal. Okay, and then what about if you have debt? Let's say you have $450 a month of debt, $300 car payment, $50 credit card, maybe $100 student loans. What you do then is we already calculated $50,000 monthly income is $4,167 a month. You can use 57% of that, which is $2,375, but when you have debts, you now have to subtract your debt from that monthly, that 57%. So what we do to figure out that is, you know, with the FHA, 57% of your monthly income is $2,375, but now you have to subtract your monthly debt, which in this case is $450. That brings your monthly, the amount of your monthly income you can use towards your mortgage is $1,925 a month. So using $1,925 a month of your monthly income towards your mortgage, because you have that $450 monthly debt, that's going to get you $260,000 of home using FHA financing at 3.5%. Now check that out. The difference between having the $450 monthly debt and having no debt is the difference between $260,000 and $320,000. That's $60,000 more home you can buy when you don't have any monthly debt, as opposed to when you have $450 debt. You can see how important having a monthly debt is. The less you have, the more home you can buy. Okay, so let's go now into $75,000 annual income using FHA financing, 3.5% down, which is the minimum you can put down. We're just going to go over the same scenario all over again. So $75,000 a year divided by 12 means you have a monthly income of $6,250 a month. Which then, remember what we do, you figure out your monthly income, and then with FHA financing you can use 57%, a maximum of 57% of your monthly income towards your mortgage payment, which in this case would be $3,562, which means using FHA financing that would buy you $480,000 worth of home. $75,000 income, no monthly debt, using 57% of your monthly income, they call it the debt-to-income ratio, the DTI, gets you $480,000 of home. Now what if you have the $450 of debt? That means your monthly income, the 57% of your monthly income of $6,250, we have to subtract $450 from that $3,562, which comes to $3,112. So now you only have $3,112 of monthly income. That buys you $425,000 of home. So $425,000 of home when you have $450 of monthly debt, as opposed to $480,000 of home when you don't have any monthly debt. That's a difference of, what's that? $55,000. That's a lot. Boy. See how important having that less monthly debts means a lot more home you can buy. Okay, so a disclaimer once again. These figures are for your educational purpose only. I've just been rounding out these figures. You know, the actual number, when you go to a lender, they're going to say you're pre-approved for, $481,000, and that, it'll be, a different number than what I'm giving you, or more or less. I mean, literally it'll be more than the number or less than the number. And that's going to be based on your particular individual circumstance, what your credit score is, how much your monthly debt is, and your monthly income, your annual income may not be 75,000, it might be 74 or 76 or whatever it is. So that's why, this is not a pre-approval video. This is just an educational video, just to give you rough ballpark figures. Okay, but in the same time, that's probably been helpful for you. I hope that has been helpful. And hey, if you need to talk to a lender, check out the links below. I'm happy to refer you. And also, I did put the numbers. There's a lot of numbers in this video. I put them in the description below. It'll kind of help you kind of figure it out, make more sense for you. Check that out. And if you found this video helpful in any way, hey, do me a favor, smash that like button, hit the subscribe button, stay tuned for more videos. And I look forward to seeing you in the next video.